I'm trading in the meat middle. You don't need the precision highs and the precision lows. You don't need that. You try to avoid that when you're using higher time frame charts. Try to avoid picking tops and bottoms on higher time frame charts. You absolutely can pick tops and bottoms in the lower time frame charts because they're going to behave subordinate to the higher time frame. What do I mean by that? If we're bullish on weekly and daily charts for dollar, it's real easy to nail down right to the pip short-term lows at key times or kill zones for dollar index intraday. It's just using these types of tools here. But if you're going short here and you're looking for the opposing draw on liquidity, that's this low right there. What's the reason behind that? What would be at that low of any importance, and why would it want to revisit that low? Because it was a sharp rally here. This induces traders to go long. The pattern that they formed here is a pseudo bull flag. I teach that in the core content. Where do fake bull flags occur? In this situation like this, and what I teach in the core content. It only goes up enough to validate the buyers on breakout on a bull flag, but it only really goes up to where I teach you. The algorithm sees this area right there. It runs above that short-term high here, and then because it took buy stops into the marketplace, smart money goes short here. So they're selling short here at the buy stops. So two things are being accomplished here. Fair value gap, premium. It trades up into it and takes the buy stops or buy side liquidity right there, this high. So your chart would look like this for annotation purposes and for your journal entry. I know, man, this is awesome, isn't it? You're all thinking, I wish I would have known this stuff 2 years ago, 6 months ago. I know. So those buy stops, that buy sell liquidity has been purged. So if smart money is selling to those buyers, what are they trying to get out at? A discount. Your eye goes right to where retail would be trying to be fortifying or protecting their position. What would be resting below that low? Sell side. Doing a clinic today. Give me a thumbs up if you want me to do one of these every day this week, except for Friday. I got plans on Friday. If you want to see me do this every day this week, live on YouTube, and teach you stuff that will knock your socks off, thumbs up this video or this live stream. Like that. It's pretty fair request. So the market drops precipitously and goes right to where the sell side liquidity is. See that? Now, what you want to study is, because we have that gap, this old gap here, that's a daily. Let's go back to the daily real quick. That's this fair value gap right there. Okay. Because we're inside that range and we're here, we have a gap that's outside of it. You see that here? We have that right there. And we have this up close candle right there. So this is a bearish order block, and it's also right in the middle of that shaded area, which is the daily fair value gap. So this is consequent encroachment, essentially right there. So in my mind, if we want to take this low here out, where another level of sell side would reside, how I'm doing that, in case you're wondering, I highlight it by clicking it. When they have the little balls on each end, you go anywhere where the ball isn't, and you hold down Control and drag it away from it, and you can create a duplicate. And then drag this over, hold down Shift, and it'll make your line straight. I learned that from my students, so I'm very appreciative of that. Every time I do a live stream or do a video and people watch me do things on TradingView, I always get emails, messages, or whatever saying, here's a tip for TradingView. And I love that. Thank you so much. So you'd be watching this. There's your order block. And I would want to see it stay below this candle. More specifically, using that level here. But if it trades above this candle here, I would be sitting still on euro. I'm not saying it's a short, but for me, if it wants to go lower, it would need to see that candlestick, keep it at bay, and not trade back to the high end of the fair value gap on the daily chart. It doesn't need to do that. Because if it does, it means something altogether, something else. And it's not a trading environment for me to do if I was to look at it that way. And it's already fulfilled a role here. It took buy stops and then sell stops. So in my mind, it can consolidate. But if it wants to go lower, it would need to stay in the lower half of this shaded area right in here. Okay. All right. So that is the business on that. I talked about breakaway gaps. I talked about PD array matrix and how you shouldn't be worrying about which PD array. You trade the one that the market gives you. Not all of my PD arrays are going to exist in every price run. I mean, that's an epiphany right there for some of you, because you think that every single one of those PD arrays exists in every fractal of price action. It doesn't. So when I'm looking at price and the people that don't like me, or they sell something, they view me as a competitor, they try to derail your studies and put nonsense about me out there, make up lies and whatever Photoshop stuff. They can't erase the fact that I'm calling it before it happens. And they can't erase the fact that my students are now making fortunes with it, with real money, and leading the pack in profitability. So we are the cult of profitability. You want to be a cult member? Sign up every day and study. Okay, it's free. You don't have to give me a PayPal payment. You don't have to give me your credit card number. You don't have to do any of that stuff. I don't run Discord channels. I am not teaching you crypto. If anybody says anything that I'm touching crypto, they're a fraud. They're a scammer. I am not doing any of that. I'm not running some private little area, drawing people in. You're never going to hear me say, you want to join my private mentorship for money? If they're telling you that I am offering that, that's not me. Drop it. Don't do it. I'm not charging you. I'm gladly doing this. I'm enjoying this. And it doesn't cost you anything but your attention. And then you have to study it after we spend time together. So I've covered what I want to cover here on Forex, but let me just drop into Cable real quick. I haven't looked at her for a while. Okay. Yeah, I would have preferred Euro over Cable. Cable doesn't have all that much clean run in here. This is too muddy. Muddy meaning it's got like a small little gap here, another gap here, and I don't like that. It's not as clean and obvious. No. Take a look at this chart in this area here. Okay. Look at this area here on Cable, which is pound versus US dollar, pound dollar. Look at that and compare it to Euro. I'll toggle back and forth for a second. You see how obvious that is? That gap really stands out, and it's singular. One of them. Versus same area. Look in your Cable chart. Gap. What's cleaner price action? Euro. So if I were trading last night in London session, which one would I have traded? I would have traded Euro. I would have not taken any trade in Cable. Even though Cable did in fact run lower, it didn't go down to take out its sell side because it only needed to go down into this imbalance here. And that's where we saw it trade to. So I wouldn't touch Cable here. But Euro dollar last night was really nice. And let's take us into the weekly chart. And let's look at ES and then bring this discussion today to a close. I know. Can't you make it one of those 4-hour sessions? Nah, not really. Because if I'm going to do this every day, I want to kind of preserve my voice. All right, so here is the business on the weekly chart for E-mini S&P. So for all you diehard Forex folks that don't think you're ever going to learn anything from me by teaching Forex concepts in ES trading, because it's not limited to just Forex in my stuff that I teach in ES, unless specifically stated, it's price delivery. So smart money concepts, SMC, that's my work. These are my creations. This is my stuff. If you want to learn how to do this, I'm showing you it doesn't have barriers by asset. It's not limited. So because my focus has been primarily on index futures, all the teachings obviously are being seen in this medium or asset. It doesn't mean that it can't work in Forex or that it stopped in Forex. It just means that my attention is in this market here. All right, so now think about what we were talking about in relationship to the bond market. Okay, now we're going to take a little bit of a step back and think, if the bond market is signaling that it wanted to go lower recently out of that range, and I'll take you back to that chart in a second when we get to the daily chart of the E-mini S&P. But that bond market moving lower sets the tone for a market that will see movement, because we left a range in bonds. So therefore, all other asset classes are free to move. They're free to move. And they leave the consolidation. So once we are in that profile, the profile being we're in a trending environment, not consolidation. We're in trending. That means that price swings can now evolve and allow daily charts to start booking sustained runs, not just intraday volatility only, and that's your cuisine you have to eat from. It's a little bit more of a sustained price run when the bond markets are trending. If the bond market is consolidating, that is a true testimony to anticipate consolidation in your specific market, whether it be bonds or whether it be index futures, whether it be Forex. It is a precursor to tell you what type of environment we are in from a macro stance. It does not mean that you can't make money within that or outside of it only. It just means that from a market profiling stance that I call profiling, it's not the volume profile where you see all these little horizontal volume indicators and such. None of that is necessary. VWAP is not necessary. Level 2 data, not necessary. All those price action junkies that use the ladders, on the right side of the chart. It looks cool, don't it? Seeing all that stuff flashing around. That's distracting. You don't need that. Everything you need is in the chart. A time-based chart will give you everything. You'll be able to forecast where and when they're going to form. And those folks are waiting for something. They needed to go to those levels, and sometimes they don't work. When I'm teaching you how to anticipate where and when these things will form. And by doing it over time, you desensitize yourself to the uncertainty where it's paralyzing fear right now. You're like, I don't know what I'm doing. This is so complicated. Go slow. There's nobody, I'm not telling you should be trading with real money in your first year. So why are you insisting that you should? Just because everybody else out there is doing it. You don't know how long they've been studying. You don't know how long they've worked very hard. And nobody comes out here, Johnny on the spot, first time, never failed, and is a superstar. Nobody has ever done that. Okay. They've always had some measure of learning that's required. And some are faster than others. And give yourself permission to grow at your own pace. I'm not grading you on the speed at which you find continuity and consistency. So don't you do it either. Now, make sure I'm looking at the weekly chart for All right. Weekly chart on ES, E-mini S&P. When we were down here in this gap here, I said we were going to look to trade up into this volume imbalance, which is the shaded area in white. The volume imbalance is the opening on this candle here and the closing on that candle here. There's no body by any candlestick ever since that formation there until this candle and this candle, which was last week and the week prior. Notice that? So this was the draw on liquidity. And then I said inside of, you want to see the real sweet spot, would be that little separation right there. This separation there with the blue lines, that, my friends, is a real liquidity void. That's an absence of any trading. No book price, no delivery, no trades were engaged, no stops were taken, no entries were given. There's no trading between those two price points. So while this was enough for the draw, which is the volume imbalance, because we only had this little wick between this closing price and this opening price, my eye jumps to that. And you can see the other one that I'm looking for. If we continue on the upside, it's here. That's where I see it, right here. That same thing, this right here looked like that here when we were down here. I said, watch this fair value gap and this order block, the opening price extended out. Don't take my word for it. I have it in recording. Go look at it. It's on the YouTube channel. I do not delete tweets. I do not change anything on my videos. Once they're up there, you can't edit them. They're there. So we did, in fact, draw higher. Now, here is one of those things that's making a lot more sense for the diehard students here that really want to know what it is that makes price behave a specific way. Bonds move lower out of the consolidation, freeing up the markets to behave in a manner that's trending, causing dollar to go higher. Dollar going higher is what? Risk on or risk off? Risk off. Meaning foreign currencies go lower. Meaning that the rallies in equities, while they still can manifest and materialize, they're going to be held at bay. They won't be explosive types of runs. They're usually going to be like that. Keep on creeping higher, small little retracements, creeping higher, creeping higher. So that's profiling. That's market profiling, understanding the behavior of how price will deliver. Now, let me make a distinction and contrast it with something like this. Let's say, for instance, that we did not need to come back up to here. Say all this didn't exist as a volume imbalance, and we didn't have this gap here. Okay. Then E-mini S&P, NASDAQ, and Dow could accelerate lower in shorts. But because it is being manipulated heavily, the stock market should not be where it's at, folks. I'm going to be real honest with you. This thing should not be here. But I have to follow the breadcrumbs that the algorithm is laying out there, that this is what the smart money entity, the people out there that's not making video courses and not on YouTube, they're not on Twitter, they're not on TV, talking heads, they're not out there telling you what to do with your money, because they're out there actively fleecing large funds. They're trading against them. They're their counterparty. They're the people that are inside the measurement of net trader position chart. When you see the large traders, when they are trading, they're opposed to them. They're providing the liquidity. That's smart money. And they're constantly in a dance with large funds. Constantly. You learn how to place your stop loss with the same logic that they do. And that's why you fall victim to it. So while smart money's not out there looking for your one micro lot on Forex or your mini contract in S&P, they don't see you. They don't see your one contract that you're trading. Okay. They don't see your micro contract, your little tiny insignificant anything. They're not looking at you. They're looking at the large pools of liquidity that large funds bring to the marketplace. And just like a large fishing boat that drags a net, okay, they're out there trying to catch fish. But sometimes these innocent dolphins and sea turtles get caught up in that net. You're that dolphin and or sea turtle. You just are a casualty of an event that's going to happen whether your stop was there or not. So they're not out there to get you. They're out there to get the large fish. And if you're in the wake or in close proximity to where they are, you're getting scooped up in that net too. So it's imperative that you understand how they go after that crowd of large liquidity. And you have to learn how to navigate. Certain markets are going to behave in a behavior that is explosive sometimes, and other times it's just something you just can't, you shouldn't be fighting it. We've been calling ES higher. We've been looking for these very specific levels, and it delivered like gangbusters. I told you that NQ or NASDAQ was the stronger to the upside. Why didn't you do all your trading in the NASDAQ? Because I'm teaching that if you use one medium, one market, you can use even the stronger market to trade this slower market in sympathy. It'll move with it. Meaning, look at NASDAQ. NQM2023 on the weekly chart. Which one was more explosive? Clearly, NASDAQ. You were told that NASDAQ was the stronger one to the upside. So the sixth sister is what? ES. So ES will move slower. It'll still go higher. But this imbalance over here strongly and quickly reached to for NQ. Back to ES, we have not even made its way up to that respective imbalance, this volume imbalance. See that? Still, ES has moved higher. But it does what? Performs lethargically, as I told you it would, because NQ was stronger. I'm teaching you visibility. I'm teaching you how, even if you were only following ES and you never wanted to touch the NASDAQ, because NASDAQ is a little bit wilder. It's thinner. And because it's thinner, it moves faster. It runs for liquidity faster because there's less contracts in close proximity to market price. So it will quickly run farther away. It will run 100 handles faster than ES will. It doesn't need much to do 100 handles in NASDAQ, which is why you shouldn't be doing a lot of contracts in ignorance, not knowing what you're doing. That thing will roast you, rip your face off, and cremate you right there where you stand. But I can teach you how to find when it's going to be an outperformer. Sometimes NASDAQ will be lethargic and it'll be reversed. ES will outperform it. Somebody that's new or recently just started trading, they would think there's no way that's like that. Listen, I've been around here for 30 years. I've seen it. But to know what it's going to do beforehand, that's visibility. That's experience. You're learning that. You experienced it real time with me over the last few weeks. The benefit is now knowing what it did, you can see that we have tools, I have concepts, I have logic that can be transferred to you and your understanding. And you can take that going forward. And also to relieve the people that are new. And when they hear me say, just follow ES, they're not upset because ES didn't perform. Now, if you're looking at saying, you told me to follow ES, I'm studying ES. And even though you did say NASDAQ was going to be the upside leader and stronger, I'm studying ES and I'm regretful because I could have took live trades before you should have and made money in NASDAQ. You're a jerk. You're a terrible mentor. Well, that's a student that's not really trying to learn. That's somebody that, is going to look for fault in anything external apart from them. The reason why they didn't make money or more money is because of somebody else. The reason why they lost money is because somebody else caused it. They're never going to be responsible. And you have to be responsible. You are in the driver's seat. Nothing I tell you should be a reason for you to press a button to get in and risk real money. Nothing. Not one thing. Which is why sometimes I'll say, like I mentioned when the senators were all given satellite phones ahead of the Memorial Weekend. I said, anything can happen, folks. Don't bet the farm on it. Be careful. Because I know there's a small group of you, probably larger than I realize, that are taking what I'm saying and going out there and trading with it with real money. So I want to remind you, there are real risks here. I'm never painting this and you're going to get rich. I'm never doing that. But I'm teaching you and promising you that you're going to read price action better than any book, course, or educator is ever going to take you to. They're never going to get this. They're never going to get like this. There's so many facets to this stuff that helps you become a freak, a precision freak. And when you are understanding the markets to this degree, in this depth, there's no reason. You never are scared. You're never fearful. You respect the risk that the markets provide and offer many times. but you're not paralyzed by uncertainty. You know exactly what you're looking for. You know what you're going to wait for. And when it forms, you take the trade, you take the entry, you know where your stop's going to be, you know where your first partial, you know where your second partial, and where your target's going to be. You're not worrying about it because you understand yourself and you understand what the market's likely to do because you've been studying it with great detail. Not just, oh, let me watch a couple videos of ICT. I got this lick. Let's go. No, that's not how this works. So, ES, we had a real gap here, and that was where I took your attention to. Very specifically, look here. That's going to be the draw. Imbalance, fair value gap, rallied right in there. So, in between here and here, let's do the same thing we just did. There's our low. That's where our price point started. Up to here. In that run right there, you can go into the lower time frames for your own homework. I'm not going to do it here. This is for your study. From here to here, on your fib, let me help you also because I know some of you are probably saying, can you open up your settings? He read my mind. Here's what my Fibonacci settings are. Okay, so I'll leave that up here for a second so you can get it. And these levels down here, the 0.25 and the 0.75 with 0.50, that is going to give you your gradient levels for grading a price swing, which we're going to go into next. Okay, but on the lower time frames, like 1 minute and 5 minute charts, look at that range around the 25, around the 75, the 50, and the 25 respectively, and see if you don't see my PD arrays manifesting there. We have this run down here. Same thing. You're going to do this is for homework. From this low up to the high of that gap right there. That's the draw. So if you were a swing trader or a short-term trader or a day trader working within this profile trying to find longs, where do they form? Price-wise, it's around this gradient, the 50% and the 25%. Go into your lower time frames. I could make this a 5-hour long video, which I don't want to do. But I promise you, if you go into your lower time frames, you're going to see these levels. There's PD arrays and setups that form there. Study that. Okay. This will help you see algorithmic price delivery and that you can anticipate them. Where everybody else out there is waiting for something. Let me ask you a question, okay? For the folks that trade market profile and trade with VWAP. Where's VWAP going to be on Thursday at 10 a.m.? Right. I can tell you where price is going to be, and then I have elements in time that I use where I know they're both going to meet. See, you're a victim. You're a casualty to uncertainty, and you have to wait around for something to react to. Just like an overbought or oversold, you can't do anything until that overbought or oversold indicator tells you. You can't do anything directionally until your MACD says it's sloping down or it's sloping up. I don't have that. My students don't have that. And when I talk to you this way, I'm not trying to be arrogant. I'm not trying to be condescending. I'm telling you what I'm doing is light years ahead of everything that you're doing right now. That's why when my results are being shown to you, it looks like cherry picked. But what do you do with when I'm doing it with weekly charts now and daily charts and it's delivering? How many things did I say in addition to this that didn't happen? It was only this. And I say these types of things because I want people that are on the fence that listen to these goobers that just don't like the fact that I'm doing this for free and I'm that good. They want to take your attention away from it. And I'm trying to be respectful to them because I could literally go out here and smash all of them. But I don't want to do that. That's not why I'm here. I want to leave in November, on a high note, a good note, where I'm not adversarial to anybody. And I want even the people that don't like me and are selling other courses, I want them, whether they openly say they did it or not, they can secretly add all the stuff I'm teaching. If it makes their product better, that makes them better. And that makes their patrons better. That's all I care about. I don't want to hurt anybody. I don't want to make anybody, lose their business. Okay. I want to help. That's all I'm doing this for. I love it. I enjoy it. And I'm passionate about it. And it's not limited to just the people that like me. I have a lot of people that are long-term followers that were haters of me in the beginning. So let's go into a lower time frame discussion on ES. Let's go down into let's just drop down to 4 hour. So here's that daily discount fair value gap. And the market rallied, consolidated, worked inside of this imbalance and into this breaker. We have a low, high, lower low. Last up close candle, extend that in the future, hits it here, hits it here. My eyes don't, I gotta look at it and see. I'm not sure if that one hit it too. Yeah, it did. So it hits it here multiple times. Okay. Now, this breaker is not a supply and demand zone. Okay. Sam Seiden and those who follow him, if they were to say that as a demand zone, okay, now it's no longer fresh. It's definitely stale bread now. It's a crouton. They would never use that logic. Okay. My PD arrays, as long as the narrative stays intact, looking for higher prices, these PD arrays can be reused. Okay, their sponsorship doesn't expire simply because it's traded to it before. We're in a large consolidation here, buy side here. The market rallies up, creates another area of equal highs. It drops back down. Where is it dropping down into? Inefficiencies here, and look real close. You see that right there? What is that? What is this little thing right there? I'll give you a second to think about it. What did I tell you ES was going to do? Go higher, right? Up into that gap. That's what this two blue lines are up here. Okay, that real liquidity void, which is the highest portion of that volume imbalance on the weekly chart. So if the market's going to gravitate up to there, we're not looking for shorts, folks. So we wouldn't look at this as a rally up into it to go short. We don't want to see that. So if we can see it go above it and close above it, it does it on this candle here, but we're on a 4 hour chart. So it's definitely going to do a close on an hourly chart or a 15-minute chart, but we're going to just do a top down. This fair value gap would be treated the same way I told you I would want to see the dollar index fair value gap to be an inversion fair value gap. That means that we see it go above it and then treat it as support. Look at the bodies of the candles. That's the narrative. That's the real story is in the bodies. The wicks do the damage. Yes, we wicked through it, but look where it closed. We traded down. Look at the bodies close right there. That's consequent encroachment. That's the midpoint of that gap right there. Here, let me make it nice and obvious. So 41.82 1/4. The open on this is 41.82 1/4. Oh, look at that. Now you're going to tell me, you're going to argue with me, okay? Dollar Menu Mentor, going to tell me that that's buying and selling pressure, that this happened to make that line up exactly right there. Really? Really? I'm sorry. I'm sorry that nobody told you in books before me. I'm sorry that you can't find it on your own. I'm sorry. But you have it now. So stop wrestling with me. You guys, you make arguments against me when I'm telling you something that works phenomenally and how these markets really book price. Inversion fair value gap. If you ever have an inversion fair value gap, and here's for your notes, folks. I was going to save this for the book, but I'll give it here today. If you have an inversion fair value gap like that, and you have a fair value gap that's just below that level inside of your dealing range, meaning you have this low to that high. This inversion fair value gap, we would want to see it trade through that because we're bullish. Buy side, this later on, we don't know that's going to form yet because we're here. It rallies through it. We expect, ICT, tell me how to know when the fair value gaps shouldn't close in. Here's one of those signatures. Inversion fair value gap. All this area should stay open, or a portion of it should stay open. Okay, so in other words, it would look like this. This is what you would anticipate as a fair value gap. Some of you would see this entry in this shaded area here. Some of my students would see this as their multiplier, meaning that they would go long when price dropped into it right there. Other students would see this and say, okay, I want to see it show me proof with the bodies respecting either consequent encroachment or the high of the fair value gap. Is there any body closing at the high? No. We do have a body close right here on this candle at the consequent encroachment. As soon as it does that, we now can trust that this area here should not be traded down into. Technical science, baby. Take notes. Take notes, Goldman Sachs. Okay, because this is the real shit. So this run here goes for what? It takes out the buy side liquidity. Now, folks that just simply watch one of my videos and they see the relative equal highs and relative equal lows that we like to target. We don't look at this as we can trust this as a short, typical retail idea. We want to see something that's going to be at a later time used as a long to go right back there and target those individuals. So this area here would be a buy side liquidity pool. Okay, so that would be a first partial. If a student would use this entry on this fair value gap, they could use this as what specifically? What kind of entry would that be? Right in here, what entry would that be? Institutional order flow entry drill. Meaning that you're only needing it to go to that level or just below it of this fair value gap. Trusting, because we have an inversion fair value gap here, that's going to support price if we get a signature showing that either one of these conditions occur. A body closes at the high or closes at the consequent encroachment. As soon as that happens, the algorithm will immediately spool and go the other direction and aim for delivery to the upside, going after buy side or in an inefficiency above old highs. Buy side's here. Did it look like it wanted to go in a hurry higher? I mean, my chart looks like this. Does yours look like that? It draws to this area here, right in here, and then what do we get? Open, immediate rebalance, bang, hits it. If you get an immediate rebalance, you know where it's going to go. I told you weeks ago that it was going to go up here. It's on YouTube, it's in Twitter, it's all over the place. We were going long. We were focusing on longs, bullish, buying, long. Where to? Right here. Right up here. Immediate rebalance. Even though we took out buy side here, guys out there trying to teach FU candles. There are no FU candles. Okay, that's not my stuff. You want to pretend there's a mythological creature out there called a FU candle? It's your business. But they'll say, okay, look at this. It's running up here. Now it took the stops. Now it's going to sell off. No. How do you know when it's going to take out relative equal highs and reverse, or when it's going to keep continuing? When you have a higher time frame PD array that has yet to be traded to. So I'm not going to look at these equal highs being traded to and then reject and go lower. That's just a partial, and I'm holding on, looking for higher prices and running into higher prices still. Now, what happens if it's trading like this on going into a Friday or Thursday, and we're getting into this area here, but doesn't quite get to the high. It could wait until the next week's Monday, or if it's a holiday, into Tuesday, okay, wherever we open up at. All these things have to be weighed out when you're reading and or trading. It's not just simply get in there and just hold over the weekend, because over the weekend there's enormous gap risk. Gap risk is the likelihood of a opening that is unfavorable to your position. For instance, say you're long and you're up 80 handles in a position you're holding for ES. It could open up where you're now only up 40 handles. Or in better scenarios, it can open up and now you're up 120 handles right from the opening. And if you get something like that, you should just take your profits there, because it's likely to come in and close in that gap. And you don't know, because you're probably just now learning, you don't know if it's going to fill that gap and continue higher, or close that gap, sputter higher a little bit, and then careen lower even still. So there's lots of things that you have to know. And by the long, drawn out, boring stuff I'm teaching you, I'm giving you all that experience in my dialogue, that you haven't encountered the reason for requiring that or leaning on the necessity of having that information in the beginning. Most of you have no idea. So, and that's why that effect, if you watch my videos multiple times, it feels like you're watching a brand new video when you're paying attention. It sounds like, I didn't hear him say that the first time, when the video is the same one. But now it's more meaningful to you because you're now trading or you're doing back testing, you have more experience, and you're like, oh, that's why he said that. Now I understand it. You can't just watch my videos one time. And I promise you, that is not a reason for you to run my ad revenue up. Okay. I don't care if you watch my videos. I really don't. I only put them up there, and I'm not taking them down when I stop in November. They're there to keep people from wanting to buy it from jokers out there trying to sell it, because they're still trying to. They're on my YouTube channel. Stop trying to fish around for the videos. The videos that you need are those. And I'm teaching you even more. My charter members, the people that pay me, they're in the audience right now learning just like you are. And the things I'm talking about right here, they've never learned that. They've never learned this. This is all fresh right from the oven of ICT, and it's not in your books. So let's go into a 15-minute time frame. I know I'm going to miss you too, but you'll have plenty of things to study when I'm gone. All right, so we have, here's today, Tuesday, Monday. Okay, so Monday was the day we traded up into the high end of that gap on the weekly chart. Okay, the gap is defined by this level as the high and this level as the low. Okay, and all through here, see how we ran up in here? This is all non-farm payroll garbage. This is trashy delivery. Then we rally. See how we fell short of that gap on the weekly chart? It didn't even get to the low of it here. And then careened all the way back down into this down close candle. And then back and forth, opened down one more time. This low right there is consequent encroachment, or just below it, of this wick. Then it rallies strongly up into the low of that weekly gap, and then trades up to consequent encroachment, or midpoint of that range high and low of the weekly gap. So think about it like this. You ever play the game Horseshoes? In the U.S., we have a game that we take two steel posts, little metal poles, and we beat them down into the ground. And we have real horseshoes, and you stand over there, and you got typically two horseshoes a player, and you try to toss the horseshoe and try to get it to ring around that little metal post. Think about your trades and where you're trying to see price go to. Okay, whether or not you get that horseshoe on that post or not is irrelevant. You're aiming for it to go to that post. So you're tossing horseshoes in that vicinity with the expectation that it's going to get a ringer. Okay. A ringer in this case on that gap would be getting to the high, which is what we see it trade to on Friday. But is it a losing trade if you got long and you got out in here and left it thinking that, okay, it might not trade, Friday's afternoon session into that high. It might leave it till the next week. I don't think it would be a losing trade. I don't think it would be a losing trade at all. And if you stick with that narrative, that as long as you're tossing trades in with the expectation that the direction you're aiming your horseshoes or your trades, or you're trying to take partials, you're trying to reach for these levels to get paid at, you don't need a ringer to be profitable. This is the right expression in your equation for success or failure. You think success is only if it goes to the target you called for. That's not true. Success is making money. Success is being profitable. How profitable? You got more money in your pocket than you had last week. You got more money in your account than you had yesterday. That's success. It's modular. Long-term consistency or longevity in trading is long-term profitability. That will absolutely have periods of drawdown where you're losing trades. And that's okay. You limit your risk, cut your position size in half each time you take a loss, and you try to get 50% of the previous loss you got. And once you get that, then you can go back to a little bit higher risk, Going slow in the beginning is important, but keeping the proper perspective in what you're looking for in price action, where is it going, how should you expect price to deliver. I've covered all that today. I covered how price should deliver. I showed you where it was going to go. I told you specifically where it was going to go weeks ago. And we got it here Friday. Now, is it, okay, I'm on a 15. Is it today? Let's go into Thursday, Friday. Okay, so here's current new week opening gap. Very, very small, little, tiny little opening gap. Did it gravitate back to it? Yes. New week opening gaps are like that little post in the game of horseshoes. You don't need it to be a ringer, but everybody in smart money is aiming for that. Okay? We're consolidating, and then we broke lower, trapping traders going short. Why? Because they think it's gone up too long. It has to be going lower. So sell side has been taken. They trap traders short, rallies, small little gap, trades down into it here, but we gravitate back to that new week opening gap. Go back over here. You see this little section of price action here? If this stays open and we take out that low, then we're going lower. Until that, I'm staying bullish on ES. Simple as that. Very simple, right? It's not complicated. It's not, making something bloated with too many moving parts. And we don't need this level. And then you're probably saying, what is that level? To be honest with you, I don't even remember off the top of my head what it is. I don't have my notes next to me. So the low of the gap and the high of the gap here. And new week opening gap. All right, so here's was it Thursday? Friday, right? Friday, post non-farm payroll, we have a gap in here. If we're bullish, are we looking for premium fair value gaps to sell short from? Hopefully you've been watching this live stream close enough to know that that's not what we want. So how do I know when to anticipate a fair value gap to form as an inversion fair value gap? You have to have narrative. Where are you? Are you looking for bullish or bearish? Is the market Has the market traded to your higher time frame draw on liquidity? That's this here. That's that gap on the weekly chart. So if we see a gap like this here, right here, everybody else would see that as a return into that. Let's go short and go lower. Now, if we see things like this, that already should tell you no, because this drop down here was this get sell stops taken and either put traders short or take them out of their longs. Then we have a market structure shift here. We have a gap here, and I love seeing gaps that would look like some kind of a, let me change the color here, it's wonky. All right, so we have this gap in here. That gap, when it trades up into it there, if you are just a casual viewer, Netflix and chill type of ICT student, you're going to get tripped up. And you're going to be like the Joker I just blocked on my YouTube channel that was posting stuff saying, this stuff doesn't work. It only works sometimes. This is nonsense. Folks, listen, okay? If you can't make it work, that's where it stops, where you can't make it work. You haven't done enough study to learn it yet. But it's always there. The silver bullet is every day in the times I've told you. And the things I'm teaching with market structure shifts and draws on liquidity, which is the most paramount lesson. That's the thing you need to know. Up in here, halfway point, consequent encroachment between the high and the low of that weekly gap. Think about that analogy I just gave you with the game of horseshoes. Okay. Midpoint is a real good target. Real good target. Best, a perfect ringer would be at the high end. But we're consolidating in here. And we closed on Friday right around here. So we're consolidating at 430. What's the likelihood of it getting up into that high to close that gap in? Very, very low. Very, very, very low, because we're going into the close and we're going into the Friday close. So they're going to leave that portion open and trade it in Monday and or Tuesday. So you would stay bullish until it hits this level. Then once it happens, you go neutral. You sit still. Not, what do we do next? What do we trade next? You trade sidelines. That wins all the time. You can't lose money on the sidelines. That is a position. Not trading is a position. Not being long, not being short, neutral, on the sidelines, no risk incurred. That is a position. And it always is profitable. It means you have the same amount of money in your account when the day ends that you had when you started. I don't know why it's such a hard thing for people to sit still. They always have to be doing something because day trading is everyday trading to them. And it's not to a professional. It's not. It's absolutely not. So when you see things like this and you anticipate that a fair value gap would become an inversion fair value gap, meaning we would want to see price trade above, come back down in, and then rally. We want to see that. And if we don't see that, we do nothing. Because the bullish narrative that we're holding, see, in your mind, or in my mind, we fell short of the low of the gap on the weekly chart, which is this level here. And this is where I'm thinking price is going to gravitate towards. It's going to go up there. So all smart money's doing is keeps throwing horseshoes until it gets up in this area here. Every retracement, every discount is an opportunity for a high frequency trading algorithm to go long. What did I just say? Yes. Every single short-term discount PD array is utilized by high frequency trading algorithms to go long and then throw their orders into this abyss up in here, in this area up here. Because that inefficiency, that the average bear, the average trader, I shouldn't say bear because I'm not saying in difference to bullish or bearish, but the average person, the average trader doesn't think like I'm teaching you. They're not even aware of that volume imbalance. They weren't even looking at that. They're arguing with me. Why are you looking at gaps when trading during that time that wasn't the front month contract, blah, blah, blah. That's exactly the reason why it works. Wake up. What are you doing arm wrestling me when I'm telling you what works and it happens? Like, I don't agree with this, so therefore let me argue about it. Instead of just saying, wow, this shit works. Let me just keep doing what he's showing. That's what I'm trying to convey. But it's like there's a number of you that don't want to learn. You want to argue. You want to debate. I'm not here to fucking debate. I'm here to show you how to make money and get the fuck out of Dodge in November. I'm getting back to enjoying my life. But you're wasting time all this nonsense of arguing and saying this doesn't work, that doesn't work, because you did 5 examples casually. You got to put yourself in front of these charts and really dig into it. You have to really make an effort to learn this and give yourself permission to know it's going to take you longer than you probably thought. But there are people out there that are absolutely murdering it. Murdering it. They've never made this kind of money in their life before, ever. And they had the same thoughts that you're holding right now. What if I can't do it? What if I can't make this work for me? I've done all this study. What happens if I fail? What happens if you just keep going? Because that's what happened for them. They did the work. They stayed at it. They didn't talk themselves out of it. They didn't let other people on the internet talk them out of it. You roll your sleeves up and say, you know what? This stuff works. It only feels complicated right now because I'm brand new. And now I'm going to sit down. I'm going to be disciplined. I'm going to put myself in there and show myself that I can do this. Okay? The rage right now is the funded accounts, the $150,000 funded accounts. Okay? Trading, let's just say, for instance, let's play devil's advocate for a moment, okay? Let's say, for instance, that you've done the work. You spend the full calendar year doing everything I tell you to do. I mean, think about it. Some of you are in college or you went to college. You submitted to 4 years of bullshit. 90% of the things you learned in college, you don't even use in your career. That's just the truth, okay? I don't care where you are. The fact that you were willing to put that much time into something and probably paid for it and probably still paying the loan payments that you can't even file bankruptcy for if you go broke, you are having to pay that, whether you're doing that job or not. All that effort and time that you were willing to put yourself through for 4 years with no certainty that you're even going to love what you're going to school for. If you don't love the opportunity that these markets present, don't touch them. Don't trade. Don't learn to trade. Don't do it. If you are not 100% convinced that this is for you, do not touch these markets, period. Don't let anybody entice you into thinking that you can learn their easy black box, this, that, and the other thing. If you're not absolutely convinced that this is for you, do not go any further. Stop. You will save so much pain, misery, probably money. If you're not 100% convinced that this is what you see yourself doing, don't touch it. Because you can't be lukewarm, half-assed, go in here and think, I'm going to try to dabble with it. Dabbling always gets your fingers burned. You're going to lose money. You're going to make money if you stay with it long enough. But it's always going to be a give and take. You're never going to be perfect. You don't have to be perfect. You just need to be profitable. And I teach with a demo account to desensitize yourself about being right or wrong. No other mentor out there stands out there championing the fact that it's demo. But everybody else that sells shit, they have a problem with me because they think that that reduces the efficacy of what it is I do and teach, and my students are making fucking money with it. What would you do if you made $300,000 in the last 3 months? Do you think that you would believe anything anybody else has to say about what you're doing that would be contrary to it? Hell no, you ain't going to give a shit. You ain't going to care what anybody says. Nobody in your family, nobody at your job, nobody that you know, nobody on the internet is ever going to be able to talk you out of what you have now mastered for yourself. And that's a skill set that you carry with you as long as the days are long and you can breathe. And your mental faculties are there. You have that skill set. Nobody can take it from you. Nobody. And you're going to let some Tom, Dick, or Harry on the internet tell you, don't do that. It's a scam. When you're seeing people being interviewed by funded companies, I don't own these fucking companies. I have no affiliation with none of them. And they're all saying that the number one group of traders that are making money at their places are my students. That should be your testimony right there. If you've ever been sitting on the fence and thinking, should I do this? Should I put the effort in? These people are convinced they did the right thing. These funded companies love my students. They love them. Who's next? Who's next? You sit down, you learn this skill set, okay? You learn this skill set. You get comfortable in yourself. You're not recklessly trying to go out and take a trade. One of the questions that came up that wanted me to cover it. How do I know when I can go for a funded account challenge? When should I transition into live fund trading? Minimum expectation and threshold is for you to be completely devoid of any kind of bubbly feeling when you do it right and you made money in your demo or whatever. If you don't feel any kind of emotion, like it's just, I mean, I've been doing this for months. It's the same stuff. I don't feel any attachment to the outcome. I don't care that it was right. I don't care that it would exactly like I expected to. If you're not in a rush to do something every single day, look at the live streamers on YouTube. They're out there pressing all the time. They have to perform like dancing bears. They got to do something for their audience. If you can sit still and say, I don't need to trade right now, and you let the market pan around and it moves a lot and you feel no regret, all the things I just said, and you're consistent in a demo, minimum 6 months. Minimum 6 months. Better traders that have been doing it for a longer time, if they're consistent, like for instance, say you're a profitable trader and you learn from me and now you supercharge your trading. Practice in a demo for 3 months. But if you are not profitable trading in general before coming to me, you have to do at least 6 months in demo. But at the end of that 6 months, you need to be completely desensitized to the outcome. You don't care. You don't care. You don't feel, no, there's no rush that you got to get in there. You're not salivating on Saturday. Can't wait till Monday. That means you're an action hound. You're all hopped up on goofballs because you're gambling. You're not trading. You're gambling. And you just want to have that outcome to make you feel significant again. You don't want to have that. If you're thinking like that or feeling like that, do not do a combine challenge. Don't try to do a funded account because you're emotionally charged. You will fail it. And it will set you back. That's mental scar tissue. And it builds into a callus. And eventually you won't want to do this because it's too painful. When all of it is available to you. Every single one of you that are listening to me right now, whether it's recorded and you watched it later on down the road or right here live, you can do this. You absolutely can do it. I'm telling you, you can do this. If I didn't believe it, I wouldn't tell you it. And you're now seeing other people around the world doing extremely well. And I'm so proud. I'm proud to be a small conduit to the bridge where they were and their newfound success. And I'm excited to see where they're going to go. I'm excited to see where you're going to go. But if you're not passionate about this, if you don't absolutely, I mean, listen, I'm not selling you a timeshare, folks. Okay. There's no upsell later on. You're never going to send me any money. And I have more faith in you succeeding than you probably do in yourself. Don't sell yourself short. It's going to take work. It's going to take effort. But let's assume for a moment, let's just say for argument's sake that you did everything I told you to do. And we're at that 6-month threshold. And you've spent time trading and you don't feel like you have to be in front of the charts every single day. You just know what you're looking for. You know your model. You know what you're trying to trade on. And it just happens to be there. And you take those trades. You're at the funded portion. Okay. You don't need any money, like big account size money. And you went the route that the shoestring budget. You can afford the funded account stuff. And you got a $150,000 account. Okay. $150,000 account. You're funded. You're doing the things that I'm teaching you to do. And you're using the logic I'm showing you here. This is Friday. Okay. Inversion fair value gap. Trading and tossing the orders up into this gap, that weekly gap. And then every discount, every short-term discount. What does that mean? What's this level right here? That's 25% level. of this range from high to low. These two levels, again, are that weekly gap. So we can throw gradient levels in there. 25, 50, 75. Look at the beautiful reaction there. Look how it hovered around equilibrium. See that? And then closing on the week. Two positions, scaling, long, another longs, partials, partial, and then stopped out. All of this idea of I'm trying to make a lot of money in a short period of time, that needs to go away too. I want to get a better payout than the last guy I saw on the leaderboard of FTML or My Funded Trader or TopStep or whatever. I don't know all the companies. I guess I have no affiliation with none of them. But you're doing this to make money. You're following the logic. You're doing all the things that you're expected to do based on the things I'm teaching you. If you do those types of things and you stick within the narrative that I share with my experience, when I sit down with you either on Twitter or in these videos where I do analysis or I show you where I think it's going to go next. Right now, we're at a point where I'm neutral. I'm neutral. My targets have been met. So I sit still and I let the market then dictate to me what I want to do next because it's already done its quarterly move for me. It might continue higher or it might reverse. At this point, I don't have an opinion that's hardline enough for me to say I'm going to take a trade in this direction. I don't have a target next. And I want you to grow comfortable in those periods because these periods here where everybody blows their account. The folks that go out and say, all right, now what next? What next? They are the ones that will absolutely fail. They're blowing their demo accounts. They will never pass a funded account challenge. They won't hold a funded account challenge in profit, wherever the stage is where whatever you do in the future, you can do a profit split. If they get to that point, they will blow it. They're constantly trying to do something else. They are not comfortable in between trades. They're not. And if that's how you feel, you have to work that out. And these are the periods where I sit still. I'm content. I murdered it on a higher time frame, weekly and daily chart for you. And for the folks that want to see swing trade ideas, where it's going to go on the higher time frames. Well, there you go. Over 1,000 handles in NASDAQ. And however many 100 handles or so in E-mini S&P. What did you do with the information? How did you use it? What are you going to do with it now at the end of this live stream in 5 minutes? And like, oh, I watched this and he could have said some things in 5 minutes and I wasted my time. You're never going to be a profitable trader if you're thinking like that. Because I'm telling you, I would have paid money to sit in something like this today. When I first started, I would have gladly spent money for this. Because it wasn't ever in any of the books and courses I bought. It was not there. None of this stuff was out there. None of these things. You're hearing it from the source. These are concepts that were never meant to be in your hands. They were never meant to be understood by the public. That's why they work so good, because it's the market. It's the market. If you had a $150,000 or $100,000 account, so you did the threshold of $100,000, whatever that is, okay, and you did the work of following the logic, doing what is necessary, and you traded when the setups were there, not during non-farm payroll, okay? And I'm answering this too because people say, ICT says, don't trade on non-farm payroll Fridays, and I made this much money, and I made that much money, and blah, blah, blah. No. I say that new students, new traders, new developing minds in these markets should absolutely not trade on non-farm payroll. Nobody should be trading during the hour of non-farm payroll, period. You can, and I've done this before. I've shown you executions and recorded, did the whole thing. I did live sessions. I've done sessions with my private group, everybody knows I can trade on non-farm payroll. Okay. I don't need to be out here dancing for the people that want me to dance for them. I don't owe you anything. What I'm giving you is the insight on how to do it. So if you want to trade on non-farm payroll Fridays, say you want to, you do the things I just talked about here. You wait until it gets all the initial volatility in the marketplace. And as long as the objective that you're looking for on a higher time frame chart, the daily, whether it be buy side liquidity or sell side liquidity or a premium fair value gap or a discount fair value gap, they're the only 4 outcomes. And you're saying that's a complication? Really? What do you use to get into a trade right now that's made you lose money consistently, but you're still holding on to it, thinking it's going to turn into some golden goose for you that lays golden eggs? Because I did all that stuff when I was younger. I did all that same stuff, folks. And I learned by losing lots of money, losing lots of accounts. I've blown dozens of accounts. I've done that, okay? And it took lots of them for me to realize that I was not going to beat it by being tenacious. I had to stop doing all these retail things that I kept buying books and courses with. When I took myself away from all that stuff and said, okay, somebody's winning. Every time I'm losing, somebody is winning. What would they be seeing in price? And that was the start of what I was setting myself up for to be who I am today, Inner Circle Trader. When you have an understanding of that, statistical probabilities state that the average trader, is probably ill-informed. They have no idea what they're doing. And I apologize, my dogs are going crazy. They probably see something outside, like a deer or something. You should have saw Bailey this morning. She was freaking out. We opened our pool up yesterday because it's been really cool in Maryland. Unseasonably cool. But there's 2 toads swimming around in there. I had to fish them out. They kept running to the bottom. And she doesn't like getting baths, but she was really looking like she wanted to jump in there. So anyway, Bella's doing better. Thank you for your concern. But here's an example of if you know what you're doing, you know what you're looking for, and you just want to have one trading opportunity where you work your magic one day and stop. Do nothing else. But you're staying with the ideas that I'm teaching you from a higher time frame basis, using the idea of liquidity and inefficiencies, sticking with the higher time frame bias, only trading in that model, looking for inefficiencies on higher time frame charts where large pools of buying and selling will occur from the aspect of smart money, which isn't in books. The logic that they use to buy and sell. I'm not talking about Goldman Sachs. Okay, Goldman Sachs doesn't know this shit. Okay, they don't know it. The things that you're learning, every high frequency trading algorithm, they implement these ideas. What constitutes a high frequency trading algorithm buy or sell isn't on the basis of a pattern. It's not on harmonics. It has nothing to do with anything supply and demand. Has nothing to do with that. There is a draw that price will stay within a buy program. It'll buy as long as this criteria is in play or in existence. And there will be a sell model that they'll only short in when these specific things are met. And there are many chaos high frequency trading algorithms where they trade both directions. All day long, up and down, up and down. That's the part I can't teach you. I can't create a language where I just can't. There you go. I'm just going to leave it at that. I can't. So therefore, what I can teach, I have. And any one of the things I've already taught, and I have more things I'm going to teach between now and November, but any one of these things, these PD arrays, okay, if you apply it with where the market's going to go, where's it likely to go, and you stay with that in that model and you trade around specific times of the day, you can find profitability. And it's not hard. Just silver bullet. There's another model I just gave out, and I told you can use it in every one of the kill zones. London, New York, AM, New York, PM. Every single day you have 3 solid opportunities. Really good opportunities. I taught you how to trade the lunch hour. I mean, think about it, folks. You have so many ways to choose from, but which one makes the most sense to you? Which one can you use? Here's an example right here of using the logic. Your baby, brand new, spanking new, right off the showroom floor. You have your $100,000 account. You're funded now. Okay? Using the logic, there you go. $19,000 one day. Would that be enough? Would that be enough? If half of that was done by you, would that be enough? If 1/10 of this was done, would that be enough for you? I don't know what's going to be enough for you. But many of you look at this as this isn't good enough because you watch somebody else do something. Folks, literally, I could sit down here every single day and roll these accounts up hundreds of thousands of dollars in days. It's no effort for me to do it, okay? But that doesn't communicate a realistic objective for students. Because if I show you these things all the time, you're going to think when you make $5,000 over a month, that's not enough, and you're going to press harder, and you're going to wreck yourself. High reward trading or really big results, that's for people that are trading with the expectation of trying to fleece you to sell you something. I don't need to sell anything to you. I don't want you to buy my books. How's that work for you? I saw a guy tweet to me, ICT is thinking about all the money he's going to make from the book sales. I'm trying to put so much into this YouTube channel that you don't feel inspired to buy the book. How's that work for you? I don't care if it sells a lot. I don't care. I only want it in print because everybody out there that has pretended they found this stuff on their own, there's no fucking way. None of you jokers would have ever learned this stuff by looking at charts or studying it. You never would have learned it because I'm telling you, I was influenced by people you'll never meet. Sorry. And you hear these guys out there, yeah, I figured this out. You didn't figure shit out. You figured out where my YouTube channel was and you found out where the Telegram channels had my leaked mentorship videos. That's what you figured out. That's the only thing you did. The books will only be there for the purposes of concreting it in history that it came from me, and that's it. That's all. That's the only reason why I'm doing it. But I'm putting so much into these YouTube videos and the content that you really won't need to buy it. You won't need to. So stop listening to the bullshit from other people out there saying, oh, he's trying to get your money. I don't want you to buy the books, period. Don't buy them. Let them be barely profitable for Amazon. Who gives a shit? I don't care. It's just a record of this is what it is. This is what it came from, and this is how you use it. And then when people want to take that book and rewrite it in their own language and create courses, I don't give a fuck. I don't care because it's going to go on forever. It's always going to go on like that. Okay, I don't care. I'm not losing any sleep. I'm not getting poor because of it. Okay, I'm not going to diminish because other people have taken my shit and rebranded it. I don't care. I'm confident that they will now start putting things in people's hands. Even if they do that, it's not classy. It doesn't have any ethics behind it. But people are still going to do it. But I know the end result will be the people that buy it from them won't get hurt because they'll know the real shit. Even if they call it something different. I don't care. But none of this stuff I'm teaching you existed in anything else. And there's $1 million bounty, folks. $1 million of my cash in your fucking hands. I'll drive it to your house. Give you a cashier's check. If you can prove that all the stuff I'm teaching existed anywhere in print prior to 1996. Folks, it just doesn't fucking exist. And that's just the bottom line. Because believe me, $1 million, there's a lot of people out there could use $1 million. And I'm telling you, they all say it. Oh, it's rebranded. Where the fuck did it come from? Where did it come from? Where did I rebrand shit? Nothing. You guys talked and said I rebranded Chris Laurie. I had Chris Laurie come out there on Twitter and say, nope, that's not my shit. Now you're saying Al Brooks. I'm waiting for Al Brooks because he didn't talk about no fair value gap. He didn't teach no inversion fair value gap. He didn't teach as an entry. None of that shit. None of that shit even holds water. I blow holes through all that shit. There's nothing out there like this. And when you understand it, you're going to appreciate that. Because you're holding something that 99.9% of the people out there have no idea even exists. And I've been hiding in plain sight behind a demo account the whole time, out there hiding in plain sight because it's a demo. Oh, don't listen to that guy. My students are killing it. They're beating the shit out of everybody else's students. They're murdering it. I got people that are doing so well, they don't give a shit about being on social media. What are you going to do when you get the skill set? Are you going to go out there and flex on social media? You're going to go out there and show the trolls? Or are you going to live your life and do what you want to do? Live how you want to live. There's going to be people doubting you all the time. Who gives a shit? Who cares? None of that stuff means anything. If they got the time and interest to do that kind of stuff, that means they're miserable. Leave them there. Leave them in that. You can't fix them. I tried many years. I've tried to do that kind of stuff for people. And I'm at that point, man, I guess it's the 50-year-old kicking in. I just don't get it. Either you subscribe to the ideas because you've seen the efficacy of it and you've seen the background of the logic I'm sharing and how it's in the charts every day. It repeats over and over and over again. But is it for you? Because I'm going to be honest, it's not for everybody. It's not. For some of you, you need a moving average crossover. You need a breakout strategy. And as long as you have good, sound money management, folks, that can make you money. I'm not saying you can't do that. I'm not saying people that trade with VWAP can't be profitable. I watch people on YouTube do it. They do it live. That's no problem. I don't care. But that's grade school level to what's really going on in price. You're not going to get any closer than perfect. I'm sorry, but that's just the way it is. And when I talk like this, it sounds arrogant. It sounds like I'm a conceited prick. I promise you, I know I was one in my 20s. But I'm just talking to you like a friend. I'm trying to intervene because you're holding yourself back. You're holding yourself back. You are the one holding yourself back. It's not me. I've already taught you how to trade. I've already taught you how to read price. I taught you models. I taught you entry strategies and how to take partials and where to move a stop. I've taught you now again why certain imbalances will stay open. How do I know that? Go back and look at the examples when I'm doing it. It's there. But I'm not obligated now, and I wasn't obligated in the past to prove anything to you. I started out this whole thing on baby pips as a social experiment to see if I created the same laboratory conditions that I went through, would I get an ICT? It never happened. I put all the things I taught in the order to I put them out. All the lectures, all the video series, all them, before I even did paid memberships. All those things, that was the way I came up in that order. From my journals, these are the things that I did where I was spending my attention, and not one person out of this entire community came out looking like me. And that was the reason why I did it. It was a selfish reason. I wanted to see, could I, as a laboratory scientist, mad scientist, try to create the same scenario, and would another ICT pop out? And they didn't. And because I got the feedback from people that they were enjoying the things I was putting out and the understanding they were gaining, the confidence they were getting, I fell in love with the idea of helping more people. Because originally it was just a self-centered just experiment to see if I could create it. And because I wasn't able to do it, I was pissed off. And my obsessive compulsive kicked in. I was like, okay, well, then I'm going to put the work in to try to create one. And then when more people started giving me feedback, it became like a rocket fuel. And I was like, wow, I really like this. I love it. I only would sell my one-on-one mentorship in the 90s. You wouldn't even, I would have never gone on the internet and shared this stuff then. Never. I would have never done it. I was selfish. And at the time, I then believed if I taught it to everybody, it would fail. Everybody would do it. And then as I learned more and more and more and learned how the markets really book, I don't give a shit. I could literally put commercials on the internet and on the TV that have no sales pitch and say, come to this YouTube channel and learn how to do this shit. I promise you, you won't spend any money, but you'll be better than you ever thought you could as a trader. Stop buying people's courses. It's done. And the channel would grow like crazy. I'd make all kinds of ad revenue. I don't need it. I'm walking away in November. November 2023. I'm closing the chapter on Inner Circle Trader. I want to be Michael Joe Huddleston. I want to be that. I want to be the husband. I want to be the dad. Hopefully, my kids give me grandkids and I can do whatever I do to spoil them. And that's what I want to do. Everybody wants to know what I'm going to do next. That's what I want to do. I want to be humdrum me again. And that's all I want. But in my absence, I want to be able to look in on all of you and see what you're doing and hear from you. Send me an email. I'm going to keep innercircletrader@gmail.com always. And if you have a testimony you want to share with me, that's great. Do that. Let me know what you're doing. I'm always interested in that. I have a lot of emails. I don't always get to you, in a real timely manner. That's not the mode of contact that is optimal, but Twitter is while I'm on it. But in November, I will no longer tweet, but my Twitter space and my Twitter account will be active. And my YouTube videos will stay up. I just won't be doing any more of them. Okay. I'm confident when I'm done with you all, come November, you will have had the best learning experience from me as a mentor, the best I can do. And I don't claim to be the best mentor. I'm not. I know invariably some of you will do very, very well with this information. And you'll probably write books and you'll probably make courses and you'll probably do whatever and actually teach it better once I'm done divulging what it is I've not made available to people. My only request is you credit me. I don't give a shit what you do with it after that, because if I cared, I wouldn't put it out here. But I want you to give me the opportunity to give God the glory for it. That's what I don't want you to rob me from. I don't care if you make, because I've made millions of dollars for people in the Middle East. I've made millions of dollars for people in Africa that have sold my shit. Okay, these people have made lots of money selling my videos. Okay, one of my biggest trolls have been selling my videos, but pretends he hates me. His whole channel's around me. Okay, but he sold my shit, and I know, and I don't give a shit. I don't care. He's got kids. Let him feed them. The point is this: I don't care. I don't care. Eat from my table for free. I have plenty. You're not going to starve me. I can do this stuff on my own, and I want to see what you all do with it. And I don't mean I bought a Lamborghini. That's not what I'm looking for. I want to see what you do with this in terms of helping other people. How are you impacting other people? And I don't mean by teaching people. I'm talking about how you impacted their lives. What did you do for them? Did you buy them a house? Did you pay off their student debt for them? Did you help them out when they needed a car and they just can't afford to get one? Do you support families financially that are destitute and you're not trying to get a reward for it? I promise I will never, ever, ever share that publicly. I will never say, this person told me this, that, because that's your reward then. But I'm asking you. I know I've put people on the rich end with my content, and they rebranded it, made mentorships, and that's how they made their money. That's not what I wanted to do. That's not my target. My target is to transform the lives and the minds and the thought processes of all of you as students, to not just simply listen to me as a mentor about markets, but how to live your life better, because I did not do the right things. And I want you to know that I did not do the right things. I was not there for my wife as much as I should have been. I've failed as a dad. I should have been at their games. I should have done all these things. That's why I give you those lectures. So that way you don't make those same mistakes in the process of finding your success and living in your success. Because you can succeed into failure. I did. Lots of money. The ability to live however you want to live and buy stuff. And you have a deficit in the emotional category for fatherhood and husbandry. It's not all about the money, folks. Right now it does feel like that. But there has to be a purpose for all of it. And how you live your life and what you do with it, that's impactful not only to yourself, but the people that you're helping. And as a 20-year-old, when I had this information, it was all about me. And I wanted it to be about me. I don't want to be the center of attention. I don't want to be it at all. And I hope that you understand that when I do depart in November, I have all of your best interests in mind, and I'm all rooting for you. I'm always rooting for you. I'm constantly in prayer that you all receive what it is I'm trying to convey. And sometimes when I've listened to recordings or whatnot, I wish I could go back in time and add something else. Okay. It would have been much more helpful if I would have said this or that. So, like I said, I'm not the best mentor. And if I don't do it for you come November, don't give up. Don't give up. Keep working towards it. Because if you see just a little bit of evidence that you can do it once in a while, that's okay. Because long-term, consistently profitable has a period of hit and miss, break even. If you can get to that point where you're break even, where you make a little bit, but then you lose it, but you don't blow out, that's progress. That's progress. And you'd be surprised how many people come to me in that stage. They've done all this stuff. They make a little bit of money, then they lose it, and they don't blow their account, but they just can't find profitability. You are the best student in my hands. You are the best one. So don't think that that's a reason for you to feel like, I'm failing as I'm doing this because I can't be profitable. I'm not going to waste any more time with this stuff. Come into these lectures and do the things I'm telling you to do, and just sit back and watch the transformation. It'll happen. It will happen. The ones that don't do well under me are the brand new, never learned how to trade, don't know anything, and they have no reason to have that Velcro effect. I can't cling to them, or they can't cling to me long enough to let them have this logic seep into their understanding, and then they see it for themselves. It's too easy for them to walk away. It's too easy because they don't have anything to lean on as experience or reason to see, well, let me stick with this. If I did signals, if I said, I'm buying here, I'm selling here, the only thing that's going to do is grow a dependency in me. And I don't want any of my students to be dependent on me. I want them to be independently minded. So they go out and they do their own thing and they're confident. They say, ICT, it's been great. I learned from you, but I don't need you anymore, babe. I'm going. Watch me fly. And I want to watch you fly. I want to see that. But you have to put some work in, and you got to let the information be presented in the manner that I'm presenting, because I don't know how to do it any better. I don't know how to do it better than I'm doing. But I know it's working for a lot of people. And all you have to do is keep showing up. Keep studying. And fall in love with this part of it, because this is what you're going to do the rest of your life. So you might as well love it. You might as well fall in love with it. It's just like your second spouse. Okay? I mean, you're going to have to love doing this. If you're miserable, if you hate trading, this ain't for you. It ain't for you. But if you know that you're going to lose once in a while, but it's okay, nothing changes anything, this means that you got to fix that to go to a new equity high. It's fine. That's the right mindset. And you're not in a hurry to get there. Regardless of how old or young you are, just relax. Let it happen. It took me 6 years to find myself. Many of you probably already have what it is you're going to be trading with, but you're wrestling with it, because every time I bring out something new, you want that to be the thing. Oh, wow, that's new. Let me try that. If you already got something you're seeing results with, stay with that. Stay with that. Find some consistency with that. And then once you've done it for a few months, if you want to supplement your understanding, delve into supplementary studies with other things that you are interested in. But you only need one thing. One thing. And you can make all the money you'd ever want. So hopefully you guys have learned something today. I had a lot of fun spending some time with you. And if, like I said, if you like this stuff and you want to see me do it again on tomorrow and Thursday, I guess it would be. So Wednesday and Thursday, I'm heading out with my wife on Friday for the weekend, and I'll be home on Tuesday, so I won't be doing anything on Monday. So I think that'll be it for this one. Until I talk to you next time. Be safe.